What's up, traders? Welcome to Elite Signals. Today I'm going to show you guys the best way to use the Fibonacci retracement tool, and I promise you no one on YouTube has ever showed you how to use this tool the way I'm going to show you right now. And later on I'm going to show you guys exactly how you guys can combine it with Elite Algo to further increase your win rate with it. So if you like this video, make sure you smash that like button and don't forget to subscribe. Let's get into the video, guys. There are two rules to this Fibonacci retracement strategy. The first rule, guys, is one of the most important, and you want to make sure that you're using the same settings that I do in my Fibonacci retracement. So you want to go over here to the left toolbar. You want to select your Fibonacci retracement tool, which would be right here. You just want to click on your screen, drag your mouse, then click again, and that's going to bring up the tool. Now you just want to right click it, go to settings, and then you want to make sure you pause the video right here and then copy every single one of these settings that you see on my screen into your Fibonacci on your screen, guys. Now that you have the same settings as me for the Fibonacci, we need to talk about rule number 2. And rule number 2, guys, is very simple. You only want to be using Fibonacci during trending markets. Now, naturally, in the markets, guys, there's 3 different trends that can happen. You're either in a downtrend that looks like this, guys, where you're constantly making lower highs and lower lows, right? That's what you call a downtrend. Or you have a sideways market, which is like this, where it stays in a channel. This is when you want to be avoiding using Fibonacci. Or you have an upwards trend where the price is going like this, making higher highs and higher lows every single time, guys. So you only want to be trading when you see you have either a uptrend like this or a downtrend that looks like this, guys. That's very important. If you have a sideways market, then you do not want to be trading that sideways market. Instead, you just want to ignore it and go to a different chart and trade that chart instead. Okay, guys, very important that you do this. Now, what is Fibonacci retracements, guys? It is a tool that's going to help you catch the retracements in the markets. A retracement being is when the price makes a higher high, goes down, retraces into a support naturally, and then goes back up and creates another higher high. So what we're trying to do here is we're trying to catch this trade right here. I'll show you guys 1 second. What we're trying to do is we're trying to catch this retracement right here before it goes back up, right? So we're trying to catch the trend going back up. And that's exactly what you're looking to do with Fibonacci retracement. Now on the other side, you want to be catching it trend going back down. So when it retraces up to here, then goes back down, this is when you want to be catching the Fibonacci retracement trades. One more thing I want to talk about before we get started is exactly when we want to be entering the trades based off the Fibonacci. And we want to be doing that when the price action hits the golden zone. So now if you guys don't know, the golden zone is when the price hits the 0.5 and 0.618 area. So anywhere between that area is considered the golden zone, guys. This is where you want to be taking the majority of your trades when retracing into the Fibonacci levels. This is going to be the zone that has the highest percentage chance that the price will retrace and go back to create either a higher high or a lower low for you guys to make profit and win your trade. Okay, guys? Very important. So the golden zone is in between 0.5 and 0.618. Now what we need to do is we need to establish whether the market is trending upwards or trending downwards. Now what I'm using right now is I'm using an indicator inside the Elite Algo tool. So over here I'm using something called swing high and swing lows. So basically what this does is it tells you where the swing lows are and where the swing highs are. And as we can see right now, the swing lows are getting higher every single time, which indicate that right now the market is currently in an uptrend. So we only want to be looking for buy opportunities, guys, right? Because we can see that the swing lows and swing highs are getting higher every single time. So right now we are in an upwards market, so we only want to be looking for a buy signal. Okay, guys? Very, very simple. Now, the way you want to set up the Fibonacci is very easy as well. What you want to do is you simply want to go like this. So I'm just going to use the replay function here and go back right there. Now we can see that right now a higher high was just made. So we are looking to catch the retracement for that using the Fibonacci indicator. So what we want to do is we want to grab the Fibonacci indicator and we want to start from an area of very good support or structure. As we can see right now, this area right here seems to be a very strong area of support. So we're going to start our Fibonacci right here. Okay, guys. And then we want to end our Fibonacci right here at the higher high where the resistance is. So around this area right there. Okay. So the 0 has to line up with the higher high, and the 1 here has to line up with the structure at the bottom where you have the most support. Okay. Now what we want to do is we want to wait until the price hits our golden zone. Again, our golden zone is down here, guys, where the 0.5 and 0.168 is. Okay. We want to wait until that retraces into that section before taking the trade again. So check out what happens here. Once we hit the play button, we can see that the price is going to start coming down. Boom. The price hit our golden zone and immediately started to reject it. Now that we've seen this rejection right here, this is actually where we want to start placing our trades, right? So right now we're looking for a buy trade. So what we want to do is we want to start selecting the position size tool right here. So we'll long position. You want to click on where the price is, and you want to use your stop loss. Always use your stop loss, guys. It's very important. Now for this, your stop loss will be set in between the 0.764 and the 1, guys. So this is where your stop loss should be. And your take profit, guys, is very simple. The first one will be the black line right here at the 0. Your second take profit would be the 0.25. And your third take profit, guys, would be the 0.618. So what you want to do is you want to close half your position at the 0 line. Then you want to close about like 90% of your position at the 0.25. Then the rest of your position, you want to close it at the 0.618. And as the trade goes up, guys, you want to be moving your stop loss up and up. So as soon as the first take profit gets hit, what you want to do is you want to move your stop loss and put the break even. That way you cannot lose on a trade once your first take profit has been hit. So right here, we're going to run this trade. We're going to see what happens. We can see that, I'm just going to speed these things up. See what happens here. Boom. We saw that our first take profit was hit right there. So at this time, you would have wanted to take 50% of your profits, okay, and move your stop loss up to break even. So you automatically won that trade, guys. You're no longer losing that trade. You already secured some of the bag, right? Now, what you want to do is you want to wait for it to hit the second take profit. Let's see what happens. Right there, guys, the second take profit was hit. Just nicked it barely. And this is where you want to close most of your positions, guys. I'm talking about 90% of your position should have been closed by now. And your stop loss should have been moved up to either the red line here or the first take profit area. Okay, guys? And then basically you let the trade ride, and whatever profit you make left, or if it hits your stop loss, it doesn't matter because you already won this trade and you already got a great return on it. So here's another example, guys. It's a little bit smaller, but check this out. It's on the same exact chart, just a little bit before it. If you use the Fibonacci Retracement tool right here and caught this higher high right there from this wick, because you can see that this high was higher than the last couple highs, you can see that the price actually came back down into the 0.618, and the 5 zone, the golden zone, touched it before going back up, guys. So your trade would have been very simple here. It would have looked like this. Your long tool, your enter trade right here, as soon as you saw the rejection, your stop loss would have been in between these two lines, right? Your take profit, the first one would be the black line, the second one would be the green line right here, and the third take profit, the final take profit, guys, would be this one right here. Very simple, guys. This would have been your trade, and you would have won all 3 take profits. You would have hit all 3. Now, if we go to the other side, guys, for the previous lower lows, check this out. Just gonna remove the drawings. We can see that right here, during this time right here, we had a bearish trend with the lower low here and lower low right there. So if we look at this, we can clearly see this. Check this out. This would have been, sorry, right here. This would have been the lower low, so we don't set your take profit here. And check this out, guys. We have a trade that hit our golden zone right there. it couldn't really, it wicked a couple times past it, but couldn't really break it. And eventually that trade would have been a profitable trade as well. So you would have entered around right here. Your stop loss would have been halfway through. The wick never touched the stop loss, so you were never taken out of the trade. Your first take profit would have been hit right here, guys, and this would have been another successful trade right there. Right, guys, that's basically the same thing on the other side. That's exactly how you want to trade the Fibonacci retracement levels using the way I trade it. Now, what you want to do, you can do to make it more accurate and to better, easier identify the market trends is we can start using Elite Algo, guys, very easily. So if we go into Elite Algo, move the drawings, and we select Show Trend Cloud, what that's going to do is automatically tell you when you're in a upwards trend or when you're in a downwards trend, so you guys can better identify when to trade the retracement levels, guys. It's very easy. So for example, right here, we see that we are in a green trend. So this means that we should be using Elite Algo to trade with the Fibonacci to use just for a buy opportunity. We can see that the golden zone right here for this one would have been in this area, and it came down, hit it a couple times before completely going back up and smashing your first take profit level and then your second take profit level, guys. And guys, if you're curious about Elite Algo, it does more than just give you upwards and downwards trends. It does a lot more than that. It gives you buy signals and sell signals, as you can see right here, and a bunch more stuff, guys, in the settings. Auto trend lines, auto support resistance, pretty much has a bunch of indicators in one, guys, that will help you take your trading to the next level. And if you guys want access to this indicator, it is not a public script, so you will not find it in the public library. Instead, you need to sign up for it on our website right here, myelitesignals.com. So if you guys want more information about that, I'm going to leave a link in the description, so go ahead and check that out. It's that easy to use it. So combine it with Elite Algo to identify exactly what trends you're in, so you guys can never trade against a trend, because that's how you lower your accuracy. So you always want to be trading with the trend to increase your accuracy, especially when using the Fibonacci retracement tool. So that's pretty much it, guys. If you guys like this video and you guys want more videos like this, make sure you subscribe. And if you have any questions, leave them down in the comments below. Thanks for watching, guys. Have yourself a good day.